Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Wednesday, September the 29th, 2010. Well, a continuation of the trend to the downside, and we have a candle that's made a lower high and a lower low. A fairly small body, even though we have a red body. The red body denotes the sellers making some net bearish progress on the day between the open and the close. And with the close being down below the previous close, it shows that the sellers are keen, certainly not as keen as they were the previous day. So the small red body and the lack of keenness compared to the previous day does raise a small amount of doubt about continuation of the trend to the downside. Not terribly significant at the moment, but there is a possibility of a change of trend. But we do still have a candle that's making a lower high and lower low, so a downtrend. Now, in Ichimoku charts terms, this is a potential Japanese hammer reversal pattern, and that's where we have at the end of a downtrend, we have a small body with a longish type shadow on the end, and it looks like a hammer, and the market is said to be hammering out a bottom, so there is potential for a change of trend, but we do need evidence. Evidence would be a higher high and a higher low. Now, the market previously tested the 78.94 area that was offering support, and the market closed only just slightly below there. Today, the market has closed down below there, but not in a terribly bearish way, and that's because of this small body and the shadow on the bottom. So what we'd like to see for continuation would be quite a bearish day. So that's another issue that's raising some doubt about continuation. Now, however, the trend is down. So if we do continue in this downtrend, then the next level of potential support is down around 78. So there isn't terribly much support on the way down. Now, in overall terms, we are trading down below the cloud, so the market has an overall negative bias, and we're also trading down below the Kijun Sen and Tenkan Sen, which means the market is bearish in the medium-term and fast-term timeframes. Both of these indicators are pointing down fairly sharply, reflecting strong downside momentum that we've seen here in this market, and the market is looking a little bit overextended because we are trading a fair way away from the cloud, so there is potential for the market to bounce. If the market does change trend, then obviously we'll need to trade through the 78.94 region and the 79 round number, and we do have potential resistance at the 79.5 region that was has changed between support and resistance fairly often. On the way up, obviously the Tenkan Sen and Kijun Sen will offer potential support. Not saying that the market will trade up there anytime soon, but that's a scenario if the market does change trend. So for today's trading, certainly the low should be watched for a potential continuation of the trend to the downside, but watch the area around 78.94 and the high for a potential higher high and higher low.